not that I'm a Bitcoin hater. It could very well be an asset for the state, but it won't back a currency system because it's too volatile. That's what gold will do. And so ultimately, this has to be done in a slow, orderly fashion, and that is what is happening. And silver will come along for the ride. It won't be linear, and it'll probably be far more violent in its move. And it will happen when people least expect it. We'll all expect it because we've seen it, but it'll catch the majority of the investing world completely off guard because they don't legitimize what's happening, no matter how blatant and obvious it is.
The official Monetary and Financial Institutions Forum, a London-based think tank with ties to central banks, has acknowledged long-standing allegations of gold price manipulation. In a detailed paper titled Gold in the New World Disorder, the forum highlights gold's re-emergence at the center of the global financial system. One chapter, Market Disruption, the Short Squeeze, addresses growing concerns about concentrated short positions in the gold market, primarily held by a few bullion banks. According to analysts, these positions suggest potential market manipulation due to the disproportionate influence of a small group of entities. As global demand for gold, especially from Brics nations, reaches record levels, the risk of a short squeeze increases. A squeeze could force these banks to rapidly buy back gold to cover their positions, driving prices sharply higher. AndySchectman, CEO of Miles Franklin, underscores this trend, noting that consistent gold and silver demand from central banks and emerging economies stabilizes prices, mitigating manipulation. This accumulation reflects confidence in the enduring value of precious metals. Legal actions against banks accused of manipulating precious metal markets have brought some success in recent years. Testimonies from former bullion bank traders during these cases revealed strategies that could render the market vulnerable to intentional or accidental short squeezes. While Bitcoin has gained popularity for its performance, Schectman notes that its volatility undermines its role as a reserve asset. Gold is expected to be the foundation of future monetary systems, with silver likely to follow, signaling significant changes in global finance. Currently, gold is showing resilience. On Thursday, the gold-dollar pair rose by 0.20% to $2,588 after reaching $2,626. This increase comes after the Federal Reserve decided to slow monetary easing, with only 3 interest rate cuts projected for 2025. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
And look, I mean, I'll go back to 2019. Why the hell would the BIS have reclassified gold the only other tier one asset in the world? Why? They wouldn't have unless it was important. Why are all the European banks accumulating gold? And as a percentage of gold to their GDP, it's almost identical. It's almost like they're preparing for a gold revaluation. And look at the amount of gold that all the Brics nations are buying. And I think that's prerequisite for a seat at the table. And being let, I mean, Saudi Arabia tried to buy it without reporting to the IMF. China's been doing it, and buying all the doré, being less than forthright. Russia's not telling us. China's the second largest producer of silver in the world and now a net importer after being a net exporter. If the People's Liberation Army buys instead of the PBOC, they don't report it. The doré and concentrate's not reported. You know, I just happen to think that these countries are putting a floor for sure under the price of gold and silver, and it's been admirable, if you will, in the way that they've constructed it. I mean, they're continuing. I mean, look at India. India's buying record amounts of gold right now, and they've bought over 900 million ounces of silver in the last 4 years. That's more than that's on the LBMA. So, when you talk about putting a floor under it, you're absolutely right. Now, I'm not saying that this is going to hold through the night because the bullion banks are pretty tough, but gold's up $18 right now in the aftermarket after getting hit. This is just another way for these countries to go ahead, hit it. We'll stand for delivery. We'll push it right back up, and we don't care what you do with the price because in the end, we're going to take delivery, and that's how they win until they no longer allow deliveries, and that's when the exchanges move eastward. And it's funny because the the Brics Grain Exchange, which it's a good analogy. The guy that's developing it said, we consume and produce more wheat than the West does, but we don't control the price. It's done on COMEX. But when the Brics Grain Exchange is completed, that will change. And now they're talking about a Brics metals exchange. They understand that the COMEX controls the price and that it is the tail wagging the dog. And so they're using, if you can't beat them, join them, fine. So do the same thing. And that's what they're doing. And standing for delivery is how you beat them. And you join them in not complaining about it, maybe even shorting the paper price yourself.
The gold-silver ratio, which measures the price of gold relative to silver, has historically averaged around 70 to 1 since the late 1980s. However, this ratio has recently expanded beyond 80 to 1, suggesting that silver is significantly undervalued compared to gold. The price gap must narrow for silver to achieve historical parity, likely driving a substantial appreciation in silver's value. A key factor supporting this outlook is the ongoing depletion of silver inventories on major exchanges. The London Bullion Market Association and COMEX have reported significant drawdowns in their silver stockpiles, with the LBMA showing particularly steep declines. This inventory reduction, coupled with growing industrial and investment demand, strengthens the case for an upward adjustment in silver prices. AndySchectman, CEO of Miles Franklin, highlights the rapid depletion of silver reserves at Western exchanges like the LBMA and COMEX. He notes that gold reserves are also declining, albeit slower. This trend underscores the limitations of fractional reserve systems, where the amount of physical metal available is insufficient to cover outstanding paper claims. As the West struggles to meet physical demand, the balance of power in precious metals markets may shift toward Eastern exchanges. Emerging Asian markets are increasingly positioning themselves to take over pricing authority, challenging the dominance of Western institutions like the LBMA and COMEX. Let's get back to the interview.
More acute in silver than it is in gold. And if you look at the stockpiles of the metals that are being held at the LBMA, at the COMEX, and even at the Shanghai Metals Exchange, they are drawing straight down. And what's different now over the last few years, and I would say it started really in 2020, than any time that people have been following this market. And look, I go back to 1990 following this market. That's when I started in this industry. For my entire career, no one stood for delivery. Never. I mean, less than 1% of the contracts did. But this is what's different now. And these countries are smart enough to be methodical about it. So they're standing for delivery. They're draining the LBMA. They're draining the COMEX very slowly, very methodically. If you do it too fast, you get a force majeure. You get some sort of a default and the whole thing blows up. You cut off your nose to spite your face. Instead, they play the game with the West. And the game that the West has played is to support the illusion of the strength of the bond market, the strength of the currency. And they never counted on these countries being coordinated, sophisticated, motivated, and wealthy enough to stand for delivery, but also smart enough to do it in a methodical fashion, to not raise the red flag fast enough. But I think in the silver market, look, there's a 4 to 6 billion ounce shortfall in London. 4 to 6 billion. That's why they tried so hard to drive the price down here into the end of the year, closing out the stops, letting their balance sheet kind of level off, and they'll take the other side of that. And there's between 700 and 750 million ounces short on COMEX. Most of this is naked, meaning there's nothing behind it but a big checkbook. And so they've been able to keep the game going for a long, long time, but it ends when the rest of the world continues to buy metals because they don't want our treasuries anymore. So when you asked me earlier about what I consider to be financial warfare, the supposed tariffs, they're not, they're sanctions. This is exactly what will continue to make these countries want to continue to use the Achilles heel of the West against us, the short positions on these commodities and the delivery. Look, they have enough money to blow it up all at once, but then the game's over. So they're slowly draining the exchanges, not so fast that the whole game ends, but fast enough to see a massive drawdown. You look at the LBMA stockpile of silver, it's a 45-degree angle, and it's falling in on COMEX too. Gold a little bit slower, but it will happen the same way. And I think what will ultimately happen is that the exchanges in the East will take over for the COMEX and the LBMA. They will be rendered a scam. They will be rendered a fractional reserve system. We're not there yet, but I think that there's no question that they understand what we're doing, and they understand the way to win is to use that leverage against us and to do it in a way that doesn't, or allows them to continue to do it as long as possible. That's why they're not bitching. They're not bitching because they understand, but they're the ones accumulating, and we're foolish enough to let it go at stupid prices.
The dynamics of the precious metals market highlight a transformative period, with rising demand, diminishing reserves, and increasing scrutiny of market practices. As physical shortages grow and global players shift their focus eastward, the traditional pricing mechanisms may face significant disruption. This evolving landscape reinforces the strategic importance of gold and silver as foundational assets in the global financial system. How do you see the shifting balance of power in the precious metals market affecting global financial structures in the coming years? Share your thoughts below. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.